With all the focuses on school starting back up and America's favorite sport, football season finally underway, no one is talking about this might be the most important week in all of markets. And that is because on Wednesday, September the 17th, Jerome Powell and the Federal Reserve will finally let us know, will we get rate cuts? And it actually looks like we finally might get them rate cuts that everybody's been paying attention to. Now, leading into that very important meeting, I've been letting you guys know the main two factors that will determine if we finally get that rate cut or not. And that is inflation and unemployment. So last week we received inflation numbers, and first we received the PPI. If you look right here, you'll see that PPI came in a little bit less than expectation. So that's a good thing, that saying inflation came down. But then we received the CPI, which is the inflation gauge for people like me and you, and it came in a little bit hotter than expected. So with those two reports, it's basically showing that inflation is staying steady and it's not really going down. But what is changing is the employment rate. So employment was really high, but now we're finally seeing some data that employment is coming down. So on Friday, we received the jobless claims, and jobless claims were expected to be about 230,000, and it came in at 260,000. So what that's showing is that more people are filing for unemployment. And we actually received even bigger data earlier in last week. We received a job data revision that about 911,000 jobs just vanished and actually was never here in the first place. So we see a labor market that actually is weakening, which is actually a good thing for them to bring the interest rates down. Now with those two data, it's actually a 95% chance that we will get a rate cut on Wednesday, which is huge for all assets. But the thing is, I'm always going to give you guys the real, and I want to let you guys know the other side of the coin, because usually historically when we get these rate cuts, the stock market actually tops. And I want to show you guys a very eerie data report to actually back what exactly I'm saying. And let's go all the way back to 2008. So 2008 is when we had the housing market crisis, and if you look at this chart, you'll see exactly what I mean. If you look at it, 2 years before the collapse, we received the top on housing. So this chart actually shows the difference between '08, the last major bubble was the housing crisis, and now. So first, on the left-hand side, you'll see right before the top of the market, 2 years before then, we've seen the top of the real estate market, which coincides 2 years from today, the top of the real estate market just 2 years ago. And then after that, you'll see on the left-hand side when we finally received rate cuts. And if you look at it, that was basically at the top of the '08 market. So again, on Wednesday, September the 17th, we should receive the first rate cuts. Now, I want to be clear. I'm not saying this is the top of the market, but what I want to do is give you guys key historical data from past markets to show you the similarity of what it was then and what it was now. So we'll see if this is the top or not. But the main thing is for you guys to be informed so you guys can make the best decision for you. Again, this is the weekly market recap, and I cannot wait to let you guys know next week what was the results of this Fed meeting. I'll see you soon. Peace.